What's up everyone, my name is Miles and welcome back to the weekly roundup where every single Friday we go through the biggest stories and events of the week to try and dissect the crypto market and work out what is coming next. In today's video, I want to talk about the 3 altcoins that whales are now starting to load up on that are showing relative strength versus the rest of the market in the face of what has been an explosive Bitcoin move. Before we get into those 3 altcoins, I also want to go through the major stories of the week, look at the current trend for Bitcoin and alts, as well as what I think could potentially happen in what's been a pretty news-packed week for the crypto markets, with EDX Markets, a new exchange backed by Citadel, Fidelity, and Schwab launching. We had multiple ETF spot applications after the BlackRock ETF, and Bitcoin dominance just keeps going higher and higher. Will it end? Will altcoins catch a bid? That is all the stuff we'll be covering in today's show. If you do enjoy these Friday weekly roundups, make sure you smash the like button and of course, subscribe and turn on post notifications so you don't miss a single show. I upload here on this channel on Tuesdays for an alpha driven show, and then on Friday, which is still an alpha driven, but primarily a roundup show, which goes over the biggest stories of the week. So if you want to stay in touch with the market, look out for these shows every Friday. The notification bell will help you do that. Let's do a quick recap of how the market is looking from a technical analysis perspective. We see Bitcoin made a huge move off the bottom range of this wedge here, which actually coincides with the 200 EMA as well as in confluence with the key horizontal at the 25.2 level. Bitcoin bounced perfectly off this zone, of course, on news of the ETF filing by BlackRock. That was the major catalyst for the Bitcoin pump here. But if you remember, back to this time when we were testing this level, there was a lot of FUD in the market. There was panic about the Robinhood alts. There was panic about Tether. And typically those FUD spirals tend to make local bottoms. That's what we've historically seen, especially from instances of stablecoin FUD. But Bitcoin responded really positively. What do you know? The day after we did get positive news with the BlackRock ETF spot filing announcement, and Bitcoin has pushed to the upside. So what do I think is next for Bitcoin? Well, the thing is, we are heading into major resistance. It's clear at the 30K level. That is clear resistance from a technical perspective for Bitcoin. I think the more Bitcoin tests this 30K level, the stronger it becomes. Because I mean, if you look at the 28K level, which was a major area of resistance for Bitcoin, we tested this like 1, 2, 3, 4, 5, 6, 7 times before we finally end up having that pullback and then that God candle, which resulted in a break to the 30K region. I think it's a similar thing here, where if we can keep testing this level and maintain some strength above the 29K area, then that could be Bitcoin's potential launch pad for a move to the upside here to break the 30K region. But you do have to understand that this is a significant area of resistance, which may become even more obvious if we look at the weekly chart. So we see here that there is a major level at the 31 to 32K level as well, sitting just above 30K. So you have a lot of people on the macro timeframes like the weekly actually front running this trade by setting orders slightly below. So there's a lot of short pressure in that zone and also a lot of profit taking in that zone as well. So very interesting to see if Bitcoin can push above. If it does, and we do have a confirmed breakout, then that would be amazing from a bullish perspective. But until then, we just have to take it day by day. The market does look like maybe it wants to pull back a little bit here in the face of what has been a pretty good run versus the S&P and the Nasdaq, as you can see in front of you. It's interesting because Bitcoin really led strongly during the banking collapse versus the S&P and Nasdaq performing really badly in what was a Bitcoin flight to safety narrative. But then what we saw was Bitcoin stalling around the 30K level, whilst the Nasdaq ran on a few very select tech stocks like the AI stocks that were performing super well, easing macro conditions, and then the stock market basically went on a run. Bitcoin lagged during that period, so despite it leading prior to that Nasdaq rally, it started lagging, and it's not until now we actually see Bitcoin starting to run. So what we've seen is Bitcoin actually front run equities over the last few instances of market pumps. Does this mean stocks will rally next? Well, the thing is they've already had a huge rally, and because they've had such a huge rally, it's natural to see a cooling off. So we have seen a slight decline in the S&P since it did hit its yearly high. We also have seen a decline across many of the Asian markets today. We saw Japanese stocks down a couple percent today. We also saw the China stock market go down today as well, 1.3%. Australia as well, and Europe is opening just now, and it looks like it's going to tick downwards. So by the time you're watching this video, which is roughly 4 hours after recording, the market will obviously have made its move. The US market will just be opening around the time that this video is going live. So a lot can change in the interim. You don't know if there's some headline or some news or something, but it looks like the stock market does want to cool off. And this is something that I did mention in a tweet a few days ago, that look, equities, they performed really, really strongly, but due to the really strong performance and the fact that they have rallied 42% from their January levels, it made sense for me to start taking some profits on my equities position. So that's something I tweeted about a couple days ago, and it looks like so far that's been a decent play considering we have had a cooling off in the Nasdaq and the S&P as well. I think that could just mean crypto has maybe a quieter weekend. You know, sometimes we do get surprises on the weekend, but I just think with the stock market cooling a little bit towards the end of the week, maybe Bitcoin also cools down. That does seem to be what is happening in the market. But in terms of the altcoin market, well, there are a few narratives which are absolutely ripping. And of course, towards the end of the show, we're going to talk about a few altcoins that whales are accumulating. But we can see here, you know, that you've got Stacks, Pepe, all performing really strongly. Even Optimism ahead of EIP also performing strongly. The Stacks trade, by the way, congratulations to everyone that got into that trade. I did a video, of course, on this channel, which was called My Number One Altcoin Trade for 2023, where I outlined my thesis at 55 cents. Since then, it's been on an absolute tear, pumping over, I think it's like 45, 50% during that time period since I basically made that video. So that's been an awesome trade. For everyone that was in the Stacks play, well done. If you aren't, I think, you know, we just wait for major pullbacks now on Stacks, but that's a narrative I also want to discuss today as well. So overall, the crypto market having some pretty nice performance today and also over the course of this week, with many altcoins up pretty massively as a result of Bitcoin. However, dominance is still rising. So you have ETH BTC declining. This is still, in my opinion, Bitcoin's time to shine until we get a greater pullback in ETH BTC, and then I might look at taking a rotational trade from Bitcoin into ETH. Towards the end of the show, I've got a level that I'm looking at for making that trade as well. But let's continue to get into the major news of the week. So obviously, the big story this week is the TradFi takeover of crypto. After the lawsuits that were handed upon Binance and Coinbase, we have seen BlackRock filing for a spot Bitcoin ETF. This was the catalyst for the latest Bitcoin rally. But on June 20th, we also saw Citadel, Schwab, and Fidelity backing a new crypto exchange called EDX Markets. Now, it was quite, I don't think, coincidental timing that we had this new TradFi-backed marketplace launching just a couple days after Binance and Coinbase were sued by the SEC. Clearly, there is an agenda here for TradFi to enter crypto, and this is something, to be honest, we've been waiting for a long time in crypto. I mean, the major thing from the last bull run, if you can remember back, that people kept saying is, you know, wait until, you know, the big institutional players start buying Bitcoin and everyone adds 1% Bitcoin to their balance sheet, and imagine how crazy the price will go then. But the thing is, that's not possible if you don't have a regulatory framework. So regulation, and I said this last year when people were really scared of regulation in 2022, regulation can actually be a really good thing if you want institutional inflows. Because if you were a company that wants to enter the crypto market, but you have, you know, lots of stakeholders to take care of, you're not going to feel comfortable, especially with what's happening from a regulatory perspective with the SEC, holding Bitcoin or Ethereum or other cryptocurrencies on your balance sheet. You also probably don't feel comfortable offering that in an institutional setting to clients, because there's also stakeholder concerns and requirements from a regulatory perspective that you have to obey. So many companies that just, you know, simply are too afraid to enter crypto. I think with regulation that looks like is coming, at least for Bitcoin being called a commodity and Ethereum and some select alts as well, then this could be a really good thing. But I know it kind of goes against Satoshi's ethos of being a decentralized network for the people, you know, if these big TradFi whales dominate the market. But if all you care about is number go up, then I think in the end, these spot ETFs end up being a net positive. We've also seen Jerome Powell, the chair of the Fed come out and say that crypto appears to have staying power as an asset class. And he also said that we see stablecoins as a form of money. So I do think the tide is turning a little bit in terms of the perception from government officials, and also, although Jerome Powell isn't technically a government official because he works at the Fed, in entities closely tied to the government, there has been a slight turning of the tide here in terms of the sentiment towards crypto. The SEC, although they've been very brazen towards their approach to regulating crypto, they are also signaling a turning of the tide here, but in terms of backing crypto from a TradFi perspective. So if we do see approval for a Bitcoin spot ETF, well, that basically says, look, the SEC is at least going to allow the TradFi players to offer products pertaining to Bitcoin. The altcoins, that is a totally other story. We are going to need to seek the regulatory clarity via the courts in the Binance and the Coinbase lawsuits. But in terms of the big coins, well, it does look like there are a lot of TradFi players now starting to enter the market. Now, of course, the Bitcoin spot ETF was the major one. This is what set off a chain reaction of ETF spot filings. In front of you, you are seeing the filing for the iShares Bitcoin Trust, which is issued by BlackRock. And off the back of that, you've seen multiple other institutions file for ETF applications. We've seen Fidelity, Invesco, WisdomTree, Valkyrie, as you can see in front of you, all file or amend filings for Bitcoin spot ETFs. So there are a lot of players that want to slice of the pie because they think now, look, if BlackRock has a good chance of getting it, then maybe we have a good chance of getting it as well, and we don't want to miss out on this action. But does BlackRock really have a good chance of getting it? Well, they've only ever failed once in their journey of 576 ETF applications at getting ETF approval, which is crazy. But they are up against a very strong opponent in the SEC who has denied 33 Bitcoin spot filings. Now, what do I think? Well, personally, I believe if BlackRock didn't think they knew what they were doing and weren't seeking the correct guidance, then they wouldn't apply it. They wouldn't want to ruin their exemplary track record to bet on Bitcoin. They clearly know what they're doing here, and clearly they've had conversations with regulators and other key players in the space to work out what the best way to approach an ETF is, because I don't think they'd ruin their record here just for the sake of applying for a Bitcoin spot ETF. So I think they're smart. I'm going to give them the benefit of the doubt as one of the world's biggest asset managers, managing $10 trillion worth of assets, and say, look, they know what they're doing, but of course, they still have to go through the correct process. That, by the way, has a timeline of what could be 240 days. We see here, according to the SEC, once an ETF sponsor submits a proposal, the commission has an initial 45-day period to approve, disapprove, or institute proceedings. So over the next month and a half, we're going to find out what the SEC's action is. Let's assume that they decide to institute proceedings. Well, then they can extend this period by up to 240 days from the date of publication of the notice of the filing of the proposed rule change. Maybe with the Binance and the Coinbase lawsuits taking place, the SEC would prefer to delay this 240 days, in which we would not actually see the final deadline for a spot ETF occur until February to March 2024. Very interestingly, every single cycle, we seem to have a catalyst. In 2017, we had the ICO boom. In 2021, we had rampant money printing. And in 2024, heading into the 2025 cycle, we have, of course, the ETF, which does line up with the Bitcoin halving here. So typically what we see with crypto cycles is the Bitcoin halving happens, and then roughly 1 year later, crypto hits its all-time high, and then you see kind of a post-halving rally start to emerge. It's very interesting that the BlackRock Spot ETF filing, and maybe just coincidental, that the filing happens basically within potentially a 1 month period of the Bitcoin halving is when it actually could end up getting approval, which could be that extra fuel for that halving catalyst to start to kick in, looking for new highs in 2025. Now, the cycle theory is yet to be disproven. I still have my doubts in terms of whether Bitcoin actually obeys these cycles, in terms of whether it's the halving instituting the price rises or whether it's investor psychology. But objectively, we have to sit back and observe, well, this could be a pretty strong catalyst that can affect the structural inflows for Bitcoin. So clearly that is a good thing for Bitcoin if we really want to work out whether it's good or bad for the market. But it's not just BlackRock that is getting interested in the crypto market. Crypto exchange backed by Citadel Securities, Fidelity, and Schwab EDX Markets has now officially launched. So it's a new crypto exchange that is basically a front end for crypto trading that is Bitcoin, LiteCoin, Bitcoin Cash, and Ethereum. And this is backed by some massive players in the market. Now, one thing to note is that Citadel, Schwab, and Fidelity are just backing. They're not legally running the exchange, but Jamil Nazarali is the ex-Citadel BizDev head that is fronting this new EDX markets exchange. It actually did get approval to go ahead last year, but it's not until now that we are starting to see it actually launch. And it was just very coincidental timing as well that the same week that we got BlackRock and all these other institutional players try to enter crypto, we saw Deutsche Bank want to start custodying crypto as well. We also see this new marketplace starting to emerge after Binance and Coinbase. I mean, you just couldn't make this stuff up. There's clearly a major shift happening at the moment. So the shift is happening. The market's bullish. Bitcoin's pumping. Might be heading into a little bit of resistance right now. Altcoins have run, but Bitcoin dominance is still running. What are the strong narratives in this market? That is what I want to discuss now. What are the coins that the whales, the big guys in the market, are starting to buy, and what coins are showing relative strength? Because in order to become a good trader in crypto, you have to be able to identify strength so that when the market makes major moves, you're well positioned in the strongest token. So let's say Bitcoin does break out above 30 and then we have a retest and we start to see some sort of liquidity at some point shift down into ETH and the alts. What altcoins are showing the strongest relative strength that could be outperformers during that period? Well, today I'm going to run through 3 of the altcoins which are doing so off the back of individual catalysts that are really strong in the face of the current market conditions. The first one I'm going to reiterate is Bitcoin ordinals. Stacks obviously being your number one kind of proxy bet in terms of market cap for the Bitcoin altcoin ecosystem. If you don't know what Stacks is, I did a full video. You can go and watch it. It's basically a scaling solution for Bitcoin that can offer smart contracts. Think of it as an L2 for Bitcoin that stacks on top of the main consensus layer of the Bitcoin network and leverages the security of the Bitcoin network via using its proof of work mining system. So you still have the security of the Bitcoin network, but you are offering the ability to offer faster execution on smart contracts and transactions. So that's obviously a strong narrative. And I think with Bitcoin pumping, and ordinals also gaining steam, earlier this year, you can make a strong argument for the BRC20 ordinals narrative to not go away. And I actually did a tweet in March. I said, look, I don't think this is going away anytime soon. A few months later, it still hasn't gone away. And 6 months later, I don't think it'll have gone away either. I think this is a narrative that's here to stay that could exemplify relative strength throughout this year. Now, if you aren't in a coin like Stacks, you have missed this initial run that, I discussed on my show slightly before it happened. So I'm sorry, but that's why you need post notifications on so you don't miss a single video. But yeah, in terms of what I think can happen with Stacks now, if I just look at the chart, we see it's pivoted nicely off, those lows into weekly resistance. But yeah, we are heading into a bit of resistance now. We had 2 wicks which failed to actually break. This is typically your bearish candlestick here at the 84-cent level. You would probably need to reclaim this level for Stacks to have, a definitive move to the upside. Otherwise, we could have a slight retracement here into this 65 to 70 pocket, just from a TA perspective. The other thing I'm looking at is Stacks Bitcoin. This does look like a cup and handle pattern. So you have your cup, you have your handle, and then this is kind of your neckline of the cup that you would need to break. If Stacks breaks this, that might actually end up being a trade in confluence with the break of the USD pair as well. Whenever I'm trading altcoins, I'm looking at the Bitcoin pairs because the Bitcoin pairs are all that matters. Your goal as an altcoin investor is to make more Bitcoin, because if you are not making more money in Bitcoin terms, then you may as well take the lower risk play, sit in Bitcoin, relax, chill, do nothing, DCA, hodl, and make more money than being in altcoins. So the entire point of trading altcoins is to try and make more Bitcoin, or at the very least outperform Bitcoin. In the stock market, when traditional hedge funds, they trade and they try and do as well as possible every single year, they always have a benchmark that they look at. Typically, the benchmark for fund managers is the S&P index, which typically generates 10 to 11% returns per annum. For crypto traders, it's the exact same, but instead of the stock market, you're using Bitcoin as your index. So everything you do has to try and outperform Bitcoin. So that's why whenever I trade alts, so whenever I get entries on trades, whenever I look at accumulating alts for spot accumulation, I don't just look at the USD pair, I also look at their Bitcoin pairs. So this is very important for every time you trade an altcoin, especially in a market environment like this where Bitcoin's running and you want to make sure you're in the strongest alts, or if you're in the weak ones, you're going to end up giving up a lot of gains to the market because Bitcoin can just pump, the alts can continue to lag, dominance can shoot up to 55, 60%, and you're going to be stuck holding coins that are underperforming, and you're actually making less Bitcoin in that case. Now, in the case of Stacks, one thing I'd like to mention is we are kind of seeing this SEC safe, this non-security narrative starting to develop, and I think it's a key narrative in the market that you have to pay attention to, and it's definitely something that the big players are watching. So, you've got Bitcoin and ETH, which are generally considered commodities. You've also got Polkadot, which could be considered a non-security given the fact that they actually worked with the SEC in the early stages during their ICO. You have STX, of course, which actually has an SEC filing because they officially launched with the SEC. So this should theoretically, in terms of the ICO, be fully compliant. So it's underneath the purview of this SEC safe non-security narrative. And then you also have proof of work coins, because what we've seen in the market in general is coins with proof of stake have tended to be the ones that are labeled securities by the SEC because they satisfy that criteria of the Howey test, which is the expectation to satisfy profit. Whereas proof of work coins, since there's no staking mechanism and you have a distributed network of miners actually mining the token, well, there's no staking. You're not staking Bitcoin to earn yield like you would be, other tokens where you actually earn yield back, which could be considered like the expectation to make profit. Whereas mining is an actual service, which is why a lot of proof of work coins haven't thus far been named in any SEC filings against any exchange, whereas 19 altcoins were in the Binance and the Coinbase filings that were primarily proof of stake coins. So Stacks, Dogecoin, LTC, these are all ones to look at underneath that narrative. Now, there's a few more altcoins that I want to look at now that are exhibiting strength. We've talked about ordinal Stacks, but I want to play on this non-security narrative a little bit more and actually look at the latest bit of evidence that we got for coins that aren't securities, and that is actually the EDX markets that launched that I discussed before. That's backed by Citadel, Schwab, and Fidelity, only listing 4 tokens. You best believe that if big players like Citadel and Fidelity are entering the market, they don't want to have egg on their face by listing a security and then having a lawsuit against them like Binance and Coinbase have. No. You best believe if they're entering the space, they are going to have the correct due diligence taken place. They're going to have the right advisors. They're likely going to even have talked to the SEC, given the fact that the SEC needs to prove this exchange for it to be a regulated exchange in the US. Thus, any token that's listed on the exchange must not be considered a security. So you have Bitcoin, Ethereum, LiteCoin, and Bitcoin Cash all considered not securities. In this market, with Bitcoin pumping, investors, they only want to be in the strongest coins, especially traders that are pair trading Bitcoin. If you're looking at the strongest narratives right now, it is hard to justify buying some altcoins or trading some altcoins versus Bitcoin when you know that there's a high chance they're either scrutinized in these lawsuits or delisted off exchanges. We already saw ADA, Solana, and Matic be delisted off Robinhood, and as a result, there was a lot of forced selling because Robinhood basically said, look, if you're holding these tokens in your wallet by June 26, we're going to automatically liquidate you. So as a result, there's a little bit of a skepticism around a lot of altcoins. So that is why I think for at least the next little bit, and what we've seen also over the past week, coins that are a little less dubious in terms of their regulatory standing, like the coins in front of you, could end up outperforming. And these are the coins, that the big players are trading. You can see this exemplified in the long-short ratios, as well as the spike in trading volume that we've seen over the past couple of days as well. Ethereum is a really key one here because I think this is more affirmation that ETH is not a security. I know, the SEC came out and said that maybe it was. CFTC said that it wasn't. There's been kind of a lot of arguments about it, but this is more affirmation that it isn't. And then you've also got LiteCoin, of course, which hasn't been considered a security because basically in many ways it's considered like the silver to, Bitcoin's gold. That's kind of how it's viewed in the market. So LiteCoin actually gaining some steam. And then this is what I really want to talk about today because we have seen over the past 7 days a 28% increase in daily active addresses, and new addresses saw a 54.6% 7-day increase. This has been a pretty strong growth from the LiteCoin network over the past few weeks, and conveniently, this comes 38 days ahead of the LiteCoin halving. So the LiteCoin halving, like the Bitcoin halving, will essentially halve the amount of LiteCoin that are being issued into the market via the miners, and as a result, you're going to see a supply decrease. Just like the Bitcoin halving, the LiteCoin halving has typically responded in positive price performance for the LiteCoin token. And actually over the past few days, although it did start breaking down from its diagonal pattern, it has broken above. So we see this is a pretty key level actually. You have your level here, you have the bounce of 52, you also have the bounce of 54. Again, you have your higher low at 67. You do have a higher low at 75. We made a lower low, but we have now started to reclaim on the daily this trend. This little pocket's an interesting one. can be a short or a long opportunity if you're a trader. It could be a long opportunity if we come down and test, then you've got like invalidation below. Keep in mind we have deviated below a few times, so crazy leverage probably not needed on this pre-halving kind of trade. Or, if it starts to break down, then that could be a short opportunity. But I think with the strength it's showing in the market, if Bitcoin holds up, it could be a performer. Of course, your big LiteCoin move is going to happen after it breaks 105 on the horizontal level. So if it somehow can break above and hold this, then that could be your kind of final blow off for LiteCoin. So this is a very interesting one to trade actually, as it's respected trend pretty well, despite a few wicks below this level. But I think that's a good one as well. And I also want to look at LiteCoin's BTC pair, because you guys know I'm a huge fan of looking at coins on their Bitcoin pairs. So let's get this up, get my face out of the way. And see how the strength is going here. So it's broken down. What I'm kind of seeing forming is a triple bottom. So if you want to look at it like this, you can see your first low, your second low, and then your third low actually slightly higher than the middle low. That is a good sign. But for LiteCoin BTC, of course, you really want to see it reclaim this 3-1 level, which is here. And from its current level today on the BTC pair, that's an 8% move. Not a crazy move, but that is the level it would need to reclaim to even think about gaining significantly versus Bitcoin. But triple bottom kind of looks like it's in play here, and we have, on a more macro perspective, for example, the weekly, shown a nice pivot off the lows, actually had a huge pre-halving run-up versus Bitcoin, then started to come back down. But if it can reclaim this level, it could be decent for LiteCoin. So that is also one, alongside some of those other tokens, that is gaining steam. Another one is BCH. So BCH also looking super strong in the market at the moment. On the daily chart, actually broke above on the last Bitcoin move, the 200 EMA. You guys know, especially on the 1 hourly chart, I love, from a relative strength perspective, monitoring tokens that can break their 200 EMAs when the market pumps. Those are typically the tokens that move the most when Bitcoin has its next big move to the upside. So this is on the daily chart. We actually saw a big daily break from BCH when Bitcoin pumped. So although that's not really tradable because it's not a break on the hourly, for me, a break on the daily means in terms of a higher time frame. So if you're trading on longer time frames, it's actually broken really key structure here, which is a bullish momentum sign that BCH is starting to gain steam. Especially versus the rest of the market, which if you look at the daily EMAs on many altcoins, they're not even close to them. This actually broke on the latest pump, which is good. In terms of, horizontal structural levels for BCH, look, you still have major resistance at 148. So you would really need to hold and clear that level and have a successful retest to potentially start, targeting anywhere close to either mid-range or range highs, which, are close to the $200 mark. But right now, this is still a level that I think a lot of traders are going to short. Maybe you could even pick off a short instead, a stop above at this level. But that is, a risky scalp trade, considering this is a coin that's showing relative strength. So yeah, if you're a shorter, probably can pick this off in the short term. If you are following this level, this is a range extremity trade, because we've been in this range since June 2022. So it's been a whole year that BCH has just been ranging. Look at this, range. You can either short here and hope for the next target, which would, be another rejection and a push towards the bottom of the range again, or you can wait for the break and try and pick off a long. I think those are the two scenarios. So obviously you'll have to trade how you want, but undeniable that this is showing relative strength. Now, I want to talk about Ethereum, because like I discussed earlier, this is the most quintessential coin right now to exemplify the altcoin market. Alts often do follow ETH. ETH is usually a leading indicator of altcoins, and right now we are seeing a scenario where ETH is bleeding versus BTC. Now, it did perform okay this week in terms of actually being able to find support at the 6.2 level, but in general, over the past couple of months, it has been in a downtrend. Now, this is a very simple chart I'm using to kind of quantify when to buy altcoins. I would prefer to pivot heavier into ETH versus BTC in two scenarios. First scenario, if we can hit the 5.5 level, which would happen roughly in August, September, October, around that, start of Q4, end of Q3 period. That could be a good level to pivot into ETH and subsequently alts versus BTC as your kind of support buy. The other potential scenario for ETH BTC is we start to reclaim, we break the diagonal structure here, and then we reclaim the mid-range. And then you have two opportunities. One, a break of trend here to potentially pivot some of your positions into Ethereum versus BTC, and then also on a successful breakout and retest of the 6.9 level, which is your mid-range, which would be a great platform like Ethereum has created before to target new range highs at the 8.1 level on ETH BTC. So for me, either I buy here or I buy on a confirmed reversal and a higher low, which we haven't got yet because currently it's just been lower lows and also lower highs as well for ETH BTC, which obviously would not be a good trend to continue if you are heavier in ETH versus Bitcoin. Look, the other scenario is we just shoot straight through and we keep going lower and lower and lower. But at that point, even if you did buy here, you would likely actually cut your position off in order to avoid any more pain and look to buy back a bit lower or on confirmation of the new trend. The other thing to note quickly as well is that this horizontal support is potentially going to be by September in confluence, especially if this keeps dropping with the 200 EMA, which is also a key level. All right, so that's Ethereum. That's my alt plan. Summarize really quick. I'm speaking quick because there's a lot of alpha to get to and not enough time. I want to make these Friday shows absolutely alpha pack for you, so make sure you smash the like button if you are enjoying it. The last thing I want to discuss is Pepe. I did a tweet today. It riled some people up. Also, a lot of people agreed with me about Pepe versus Doge. I have a thesis here which I think applies not just to Pepe, but to the broader crypto market. Now, before we get into that thesis, Pepe has been one of the strongest performers. Whenever the market shows signs of bullishness, this continues to be one of the tokens that the market just flocks to because retail loves memes. So when they know they haven't caught the Bitcoin trade, the next thing they turn to is the meme coins. And Pepe, being your strongest meme coin in recent times, has been the coin a lot of people have turned to. Now, you have had a significant pump from this level that I actually outlined on my banter shows a couple months ago in the middle of June, all the way up to range highs, which it actually ended up breaking yesterday. So 78% move, but also broke above this key level. So what's next for Pepe? Well, if you can have a retest and it holds this key horizontal, I think there is a genuine case for a sustained rally here if Bitcoin holds. If Bitcoin drops, expect this to drop harder than Bitcoin because it's a high beta correlated play. So it is correlated generally, at least it has been over the past few weeks, but it moves a lot quicker and a lot more aggressive. And especially if we look at the 1 hourly, you'll see here that, we had a bull flag, we broke out, we're actually forming another bull flag. So just keep an eye on over the next few hours. Obviously, this show is a bit early, so by the time you watch this show, this actually may have broken down, but watch how this breaks out. If you start to have a breakdown from this level, and then you have a bearish retest, SR flip in the negative direction of your mid-range here, then I do think you could see lower targets on Pepe. However, if you break to the upside, well, you best believe that Pepe can go even higher, but it's not the greatest long right now. I would much rather take a support long on the daily, which is around the 14.8 level, than try and play it here. That's my opinion on Pepe. But look, my short-term trading plan I don't think is nearly as significant as the long-term plan. So I believe next cycle, and I did a whole tweet on this that you can look at on my Twitter, but I believe next cycle, Pepe outperforms Doge. Why? I have a few simple reasons why I believe this is to be the case. One, the underwater thesis. Think about how many Dogecoin holders bought the highs of Doge when it was almost $1. In fact, I'll get the Doge chart up for you right now, that are now underwater and are looking for a reason to exit. This is kind of a phenomenon we see across crypto where the old coins struggle to perform as well as the new coins each cycle, for the major reason being there are a lot of holders that bought the highs and are simply underwater, and those guys, when it starts pumping to 10, 20, 30, 40 cents, they're going to look for exits on those positions that they entered. I mean, look at how high it was. We all know how psychology in crypto works, and also just mathematics, right? When the price hits its all-time high, that's typically in the lead up to that when you're getting your all-time high amount of buyers and new holders coming in. So when the majority of people are buying up here, and the minority are buying down here, then the majority are underwater. And as the price rises, you have continuous sell pressure on the token that's suppressing the price. And look, I'm not saying Doge will be about performing next cycle. I actually like a lot of things about Doge, but when you're doing a direct comparison with Pepe, well, it's hard to argue that Pepe doesn't have the benefit of being newer and not having those constraints that Doge has, only being a 2.8x away from its all-time high versus Doge, which is a 12x away. It means less holders underwater and less sell pressure. The second factor is I think people are getting fatigued with the Doge meme versus Pepe. I think people are a little bit kind of getting tired of the Elon Doge memes. People, aren't finding it that funny anymore. It was a real bull run thing. I think Pepe is just a more relatable meme for most people. I mean, it was a meme way before crypto. It will be a meme way after crypto. And for that reason, I think it just resonates with people and it just feels fresher. It feels like people in a bull run would really back that token. The other thesis, which I didn't write here, is the dumb money thesis. And this is not just for Pepe, this is for Doge as well. A lot of people, especially, your retail participants, the dumb money in the next cycle, when you start seeing liquidity conditions really start to look good from a macro perspective and people start to enter crypto again, they're not always going to think like smart money and enter the tokens that are showing fundamental strength. A lot of people, they're just going to enter, whatever they find funny that they think they're going to get a pump out of. And a lot of the time, these are the meme coins, your Pepes, your Doges, etc. So I'm not like, these real traditional fundamentalists, although I am a fundamental analyst. I'm not like some of the other guys that are like, oh, I hate meme coins, they're a joke. I can't believe they pump. It's disgusting. It's bad for the space. I don't really think of it that way. I just think of it as, look, retail loves memes. When retail comes back, I think memes continue to outperform many of the tokens in the market. And if I have to pick one at that time to get into, I prefer Pepe over Doge for those two reasons. And then the third reason, the just potential market cap gains, given the fact it's 14x lower in terms of its market cap. Now, there is a counter argument that obviously Elon is backing Doge. You have the proof of work coins or the SEC safe coins, potentially including Doge under that narrative as a proof of work coin. You have more listings, more brand awareness. That also bodes well for Doge. So I want you to make your own decisions. If you prefer those three arguments versus the first three I outlined, that's fine too. I just believe that Pepe has a slight advantage for the reasons I mentioned. But I'd be very interested to hear your opinions in the comments below. A couple points to wrap up. I'm going to wrap up on a slightly motivational note here. Guys, just look at the amount of FUD we had a couple of weeks ago. We had Tether, we had Coinbase, we had Binance, we had Jim Cramer, we had the AI pivot, we had Vox saying, now might be a good time to consider quitting crypto. All of these big bearish headlines happened literally at the bottom. When things look their worst in crypto, that is often right before a new dawn. And time again, we continue to see this. When there's max fear, when sentiment's at its worst, when there's panic, that is actually when crypto often sets its lows. So there's just a reminder that when you're scared, you actually, have to either use that as an opportunity to take advantage, aka, buy, accumulate, counter trade sentiment, or at the very least, stick to your guns and not be a panic seller. Look, even if you think we're going lower, don't be one of those guys that panics out of their bags and makes irrational, crazy decisions when you see these fearful days. Because oftentimes, when there's blood on the streets, that actually ends up being the best time to buy. And I mean, time and time again, when sentiment is at its absolute worst, these are proven the moments to be the best opportunities to accumulate. And I actually did a little anecdote here. In November, I was petrified, right? FTX was happening. I was so scared the market was going lower. I even said in a tweet in November that I thought that ETH was going to go much lower on November 10th. But in spite of that, I said, I just bought some more ETH because my rule is to buy when there's blood on the streets, and I'm sticking to it. And I'm proud of myself for this. Not because, I want to toot my own horn or give myself a medal, but because it was one of those times where I was genuinely scared. I know a lot of you were scared, but I stuck to my strategy, and it's yes, on huge red days, I'm going to buy no matter how I feel. When I see capitulation, I'm going to take advantage of that. And November 10th, if you want to go into the charts, you can see that ended up being the actual ETH bottom. I think November 9th was, but the 10th, you actually saw sub $1,000 ETH. And a lot of that ETH, I did take profits around 2,000, but some of it I'm still holding, and a lot of the alts I bought I'm still holding as well. That is significantly up. And I have taken profits, of course, in that run-up, especially in April. I took heavy profits, but those were amazing buys. And the only reason I exposed myself to those gains was because even though I was scared, I stuck to my strategy. And that's a big lesson for you guys. Don't let FOMO, don't let fear go against your strategy. And that logic goes in reverse as well. If you're feeling like really you want to buy right now, you want to ape, but you didn't want to ape last week, also don't use the fact that the market's looking bullish as an excuse to FOMO in either. Always remain objective and stick to your plan. If I told you last week when you were scared that Bitcoin was going to hit 30K, would you be wanting to buy more at 30K? No, you probably want to sell some more. So it doesn't make sense that now you suddenly want to buy more. Like, nothing has changed. There's been a few announcements that we knew were inevitable. We knew TradFi was going to get into crypto at some point. We knew Binance and Coinbase were going to be sued at some point. We know stablecoin FUD comes up. Nothing really took us by surprise this week. but everything happened in such an order that panicked a lot of people out of the market and is now panicking a lot of people into the market. So just be aware of that sentiment and always remain objective. I, of course, am here to help you every single day over in Crypto Banter, link in the description to that, and on this channel twice a week, and of course on my Twitter as well for daily crypto alpha. I hope you guys enjoyed this video. Remember to subscribe if you aren't subscribed. Turn on that post notification bell, and I will see you next Tuesday, and of course on Twitter, probably in a couple of hours. I'll see you later. Peace out.